we'll go ahead and what's up, Maya? We'll go ahead and hit the recording. The session started. Say hello, everybody. What is going on, everybody? Welcome in, Danimal, Alina, Daniela. Derek, what's going on, Derek? Welcome in, Dr. Latrice, Joe Williams, Captain George, welcome in, and Maya, Pablo, welcome in, Prachi, welcome in, Tommy, what's going on, and Miss Iris. Yeah, man. I think it's been a while since you've been in the Matrix, man. No matter, welcome back, welcome back. But
Yeah. Hey,
our,
once
our
again,
our I know, man. Our guest of honor, man. Master Marcus Morpheus McKinnon, man. How's it going? How's your week been going?
going good,
Almost,
man.
let's say month. It's been a little bit longer than a month, maybe since you were here last time.
Yeah, everything's been going good, man. Life is life. Lots of things happening. Family, kids. If you have children, you know how it is. So that's what's going on with me, man. How about you?
Same thing, man. Yeah,
Yes, sir.
family keeps us busy.
Oh
Family
yeah,
keeps us busy. Trading keeps us busy. And we'll try to make the best out of it. But yeah, but
most
welcome in,
definitely.
guys. Welcome in, guys, to us the Trade Circle. It is Sunday, April 27th, 2025. This is our monthly ETM supply and demand session. TradeETM. We Marcus and I will bring back and focus on those ETM candles. You know how we can how what happened with the market with some ETM session candles and look for to also speculate moving forward. But as always, right, the Trade Circle. We are it's an educational platform. So any information shared, any trade ideas, suggestion, it is pure speculation. So we always trade at your own risk. Trade responsibly, but most importantly, do not trade any money you cannot afford to lose. So, Marcus, the floor is yours, man. What we got
All
for us
right.
today?
I appreciate it. Appreciate it. Well, we with ETM, you all know. Well, I say you all know. Some of you may know. We do our introduction, which is part of ETM. And the goal of ETM, of course, is to help all of us, become better traders. But most importantly, to have an awareness of what, trading actually is, the benefits of it, and also, not to get caught in the or subdued really by the matrix and everything out there that can ultimately get us off track. Um, but of course, you know who we are, Marcus, Morpheus McKinney, and Gerardo G Money Paez. Of course, we've been trading uh, for a number of years, and we started ETM together, and we've been improving on it, and it's been the foundation of everything that we do now as traders, and everything that has been built upon that help us become better and better in this particular craft. And not only, trying to execute it, but also sharing it, right? It's a very simple method, and more of a concept as opposed to an a particular set of rules or rule-based strategy, right? But as we get started, we always have to ask ourselves, what is the matrix, right? And the simple answer to that is the matrix is um, system, system of control, right? A system that would seek to place perceived limitations upon us, affecting the way that we see ourselves and interact with the world around us, right? But what does it really mean? Well, if you think about it, when I said a moment ago being subdued by the matrix, right? There's there's layers to it, there's levels to it. What I've come to find out in my experience, right? And so when it comes to trading, we're all enamored initially by the potential, the income potential, right? The life-changing income potential from trading, which is there. It's available. Um, the potential of it is, very available, right? But we get or we can tend to get fixated upon that. That's what is offered to us over and over again via many chain exchanges of information and over different mediums of or media platforms, what have you. Right. So we can find ourselves sometimes consciously, sometimes some subconsciously being focused on just obtaining that portion of it, trying to extract money from the market, right? But that's not really how the market works, right? It's not going to allow you to consistently do that on a greater and greater scale without um or if that's the only thing that you're focused on is getting money, got to get that bag, right? So not to go too far into that, that's part of what, the matrix is. We get caught in that cycle, right? We're trying to get it, get it, get it. We over leverage, we risk more than we can lose. Um, then we step back, then we try to do it better. We try to get some gains here, 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 compound, compound, compound. We see things going well, then we allow ourselves back into that mode where, okay, now I can really risk more, and things begin to slide, and they can slide to a greater degree. And these are things that are coming to just about all traders and to a certain extent. But there comes a time when those who are going to have longevity, if they get beyond that inconsistent um, cycle of, poor psychology, poor risk management, just focusing on getting money, and you begin to initiate a process, right? And the thing about trading, it's not going to work quite as well when other areas of your life or mind or whatever are not in order, so to speak, right? If you live a chaotic type of life, then you're not going to come to the charts, right? And just push aside all that chaos. And now you're focused on a system. You may be able to do that for a trade. You may be able to do that for a moment, but to do that consistently, day in and day out, it's not very feasible, right? So what are we here to do? We're here to understand that we can break free, from that vicious cycle, if you will, right? And we can transcend beyond those perceived limitations that the matrix puts on us, where we only can be successful if we win, and we win a lot, and we win big, and we win excessively, and we live a very, visibly or ostensibly luxurious lifestyle, right?
I
Which
think I,
is,
thi- I think we talked
go
about
ahead.
it last time, Mark, is that how right now a lot of people use the Robert Kiyosaki book, the left side quadrant and the right side quadrant, and you're in the matrix if you're in the left side, right? But then when you
Right.
and that's why you have these boxes here, right? These layers that it's
Yeah.
like, yeah, you get out of the left side and you go to the right side, and if you don't watch yourself, you're technically jumping into another system of control,
Right.
right?
Right.
And as you were mentioning this whole time, is just the system of control is just that illusion that you're in a better place, right? The
Right.
illusion that you're in a better place. But again, like you've been saying, it's like if we're in control of our mindset, our state of mind, our happiness, right? We can be anywhere
Mhm.
we want. We can be in the left quadrant, right quadrant. We can be at a job. We can be self-employed. We can be a business owner, investor. As long as we're at peace with each other, with individually, uh, you know, there is no matrix, right? There is no matrix trying to control us. And I know that even like I said, even in the trading world, even in the trading space, there is a system of control, that illusion that you've only made it as a trader once you're driving a Lamborghini.
Right. Yeah. 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 So that's they that's a very good point. Excellent point. It is an illusion, right? That you have to be in a certain place, right, in order to, be seen, a certain way. You're successful. I don't work a job, right? I got, my own business, right? And again, it's many levels of this matrix, right? Many matrices, if you will. And if you become self-employed, I mean, just think about it. What is it? Maybe in the last, I won't even say 10 years, really. I would say maybe 5 to 7. The the side hustle culture is just like you get overran with it, right? Everybody's got a side hustle, side hustle, side hustle, side hustle, side hustle is gonna become the main thing, right? Here's, 7 steps to, you know, having this side hustle, and they give you the magic number. What's the magic number? I'm sure you probably already know of monthly income, right? Everybody can make another $10,000 a month, right? Nothing's wrong with making $10,000 a month. Nothing at all, right? But we get enamored, or they try to, it's just pushed on you, right? And then if you're not aware, you find yourself like, man, you take on a side hustle, and guess what? That side hustle is going to require work. It's not like, hey, I'm gonna wake up, I'm gonna do this for 30 minutes, and I'm just gonna be start collecting checks or whatever. No, it's a process that you have to learn something. Does it work? What's the best way to do it, right? Um, does it is it really beneficial, right? There's probably some level of skill and knowledge that you have to have or acquire to be profitable at the higher levels in whatever that side hustle may be. Before it was, drop shipping and, e-commerce, and, I've looked into, some of those things. I didn't do it, but I looked into them, and I realized it's more of the same in a sense of, okay, somebody's telling me this is a way to do it. You should see these things over here, but okay, it's more time I have to put in, right? So we only have a limited amount of time, and we have to choose, okay, what am I going to put my time in? Because you can get good in just about anything if you will put in the time to it, right? So if trading became a thing, like I can put my time into this, I like it, I can do it, I understand it, right? And so you move forward with it, right? We can't have, and that's the problem. We try to have 8 different side hustles, and you just scattered all over the place, right? But in the essence of time, move forward. But essentially, that's what the matrix is, right? And that's what we do these sessions so we can talk about those things, and also how we arrived at that point of ETM. Anyway, um, but what we want to, in terms of arriving at the point, what G and I begin to realize, right, in terms of trading in the charts, right, in addition to the matrix itself, is that the charts are sort of a matrix, right? And we realize that, hey, there's no spoon,
That's
as
right,
the
man.
movie states.
Absolutely. Yeah, appreciate that, man. It's
Yeah.
always good talking about the Matrix and just how that works, man. How that movie, the movie's been in the 90s, is talking about it today, and it was ahead of its time.
Hmm.
And now everything that we're doing now with trading does also connect with this. But we have three themes that we can connect our strategy or the ETM strategy back to the charts, right? There is no spoon. I know Kung Fu and free your mind. So basically, there is no spoon, right? The market is fractal. The word fractal, it's a pattern that, it's a never ending. And, the, the beautiful thing about trading, right, is that we can buy or sell up or down, make profits, multiply our money as the price is going up and as the price is going down. A lot of people that do not know about trading only know investing. And they're just seeing red all over across all the major investings there is. Like, oh, the market is crashing, the market is crashing. And in reality, it's just a pullback. The market has been inclining, on a rise since forever. And it's just a major pullback, but obviously in the moment, people are getting affected or think they're going to get affected and so forth. And but yeah, so when the charts make those candlesticks, when the chart makes those patterns, right? Those patterns, they repeat themselves across all different scales. And what are the scales? Well, it's the time frames. Okay. When we're looking at a chart, we have the power, the capability of changing time frames. And those the patterns that we look for, they repeat themselves also over and over and over again. So that actually makes it easy for us to study the market, right? We just got to stay on one time frame, find the patterns that are working in the favor of buys or in the favor of sells. And then if you really want to fine tune that entry, lower the stop loss, get quicker gains, all you got to do is just take it down, let's say from a 4 hour chart to a 5 minute chart, and repeat those, and repeat that strategy inside of that frame, right? But that's what it means. But what I like about this here, the last part here, is that the market itself, right? We cannot bend the market to our will. That's impossible. We only seek to realize the truth that the market is a constant flow of opportunity based on your perspective, right? There's a lot of strategies that are out there with trading. Some claim that they're best, some claim that they're consistent, etc. On our end is just we just want to make sure that you can see a strategy, and there's always opportunity, right? Some people find opportunity in the trading market. Some people find opportunity on just counter trades. Some people are really good at finding opportunity in a range, right? So the market, just because the market is ranging, it does not mean that it's not tradable, right? It just means you just can't trend setup. When you're at a resistance, yeah, you sell. When you're at support, you buy and take profit. So there's always opportunity. I always try to come to the market like, hey, there's opportunity here today, and we'll do the best we can to take it. But moving along, so this is our technical analysis for the ETM sessions, right? I would like to say I know Kung Fu, okay, and mastery through repetition. So with the ETM candles that you see below, right? That when you know those simple movements so well, and that you can perform them without thinking, you are free to pay attention to more advanced details. So those ETM candles, right, which we'll cover in our last part of the section here, in detail, going back to the charts, basically lets us know, where to enter, where to exit, and how to do our risk management, right? And it's very, very simple. We don't have to focus on the entire chart for us to do that. We just focus on those ETM candles. And once you start seeing those ETM candles, which is also a price pattern, right? Then we can start paying attention to the broader aspects of trading. But that's the technical analysis part. Technicals, as we always say, right, is about 95% of the trading space. Excuse me, 5%, 5% of the trading space. The 95% come from the mindset. So we closed out this ETM introduction here with free your mind. Marcus, close it out.
Uh, Appreciate that. Appreciate that. Free your mind. Absolutely. Says here, doubt is not a pleasant condition, but certainty is absurd. This is from I believe, French philosophers or whatnot, Voltaire. I think that's how you say it. Either way, um, it's a it's a good thought, right? Doubt. We all have had doubts. We all have doubts in certain areas. At times, it can feel greater than others. Doubt is a factor that will come into our lives at some point in some way, and there are ways to work with that, manage that, and overcome, you know, what it is we may be doubting, right? But it says here certainty is absurd, right? And when it comes to the market, right, when we want to, free our mind in many ways, and when dealing with this market, we want to be able to operate in a way that allows us to do that. And what we have to really free our mind from in terms of the market is certainty, right? We have to learn how to embrace uncertainty, right? And that is also kind of it can parallel to life in general, right? We have to learn to embrace uncertainty, right? There's so many things that we subconsciously may believe or do or think, and we're so certain about those things, we may not even realize, how much we're operating, from a place of certainty, right? And whenever those things that we are certain about get challenged or shifted or taken, right, they can have a great effect on us, right? It could potentially be detrimental. And when it comes to the market, when we operate from a place of certainty, right, we're just setting ourselves up for greater and greater disappointment. We say, okay, this is the setup. They said if we do this, put your entry here, put your stop loss here, right then they go for a 3-to-1, then okay, it's definitely going to work. No, I mean, whoever is telling you or has told you or would have shared with you, hey, this is definitely going to work, or this particular strategy, you'll be able to do this or you'll be able to do that. No, none of that is guaranteed. The market is a repeatable pattern, but there's a element of randomness to that pattern or whatever pattern you may see that is going to prevent or is going to uh, eliminate certainty, right? There's always an element of uncertainty, right? There's varying degrees of uncertainty in the market, right? So the only thing that we have control over, right, which is what G and I stress all the time, is our risk. That's the only thing that we can truly manage, right? And if there's anything to be, certain about to any degree is that, okay, if this trade doesn't go my way, this is what I'm going to lose, right? That's the only thing that we really can be certain about. So trading is less about winning and really more about managing loss in terms of, your strategy. But we tend to operate again, maybe consciously or subconsciously from an area of certainty, right? Where if I do these things, right, then the trade should win, right? If I take a certain number of trades, then I should be able to win this amount. Or if I have this amount in my account and, I'm go for 1% a day. I've done the math on that many times. You got this amount capital, 1% a day over this amount of time, you know, it should compound to this, right? But for me, that was a poor approach, a mindset to uh, growing your equity, your capital, right? Because if you're focusing on winning 1% every day, you're not going to win 1% every day. It's just not happening, right? Because if you're going for that on days where you are down 2%, 3%, as opposed to stopping and say, hey, okay, this day is over for me, you're gonna say, no, I need to get that 1%, right? And then you take a couple more trades, now you're down 4, and down 5%. You win a trade, you back up to being down 3. It can lead to over trading, right? If you're not careful, right? And then again, or well, once again, I should say, where you find yourself trapped, right? In a matrix of compounding, and something that we may have thought was righteous or benign to some degree, that hey, it's okay if I'm going down this road, but then again, you find yourself trapped in the matrix of trying to get 1% a day because we're working from some level or degree of certainty in our psychology. But if we can learn to recognize that, then we can learn to remove it and operate from a standpoint of control of risk and the uncertainty of repeatable patterns in the market. So, take from that what you will. But once again, when we learn to embrace uncertainty, right? Because the market is uncertain, even in the things that we see over and over again. We learn to embrace that. And as G said, what will the market offer us today? We look for opportunity, we control our risk, and then we let the pips fall where they may. But ultimately, it's another step in freeing our mind.
100%. Yes, sir.
Yeah.
There it is, guys. Appreciate that, Marcus. Let's give some love to the Marcus there. Give some uh fire emojis or triple C's just to make sure. But no, actually, Marcus, with that, man, that's actually a good quote right there, man, because You stopped sharing, did you? Right? I'm trying to look for the screen.
No, I did.
Okay, okay. Let me. Where's your screen? There it goes. There it is. Yeah. So, and I'll start with this here. I like what you said though. That doubt is not a pleasant condition, but certainty is absurd. This week there was one of those ETM candles that I saw of 15 minute, man. I like that one. I like that one, and I wanted for the market to go there. I believe it was Tuesday morning,
Hmm.
and I got stuck in my bias. I was so certain that it was gonna go to that one that I lost kind of track of the market to start the week. And let me go ahead and share my screen real quick, and then we'll go
All
to
right.
those ETM candles. But the session, but I do want to start there just because the quote there is
It's
definitely
a
on
good.
point,
Yeah.
where it's like we do have to be like water when it comes to these charts, right? We do have to be like water. And again, if you know how to risk manage, if you know where to put entry, your stop loss, and your take profit and manage those things, again, we're in control of our trades, right? That's the only thing we can control in our trades. But check this out, Marcus. This was technically technically sound. It was that perfect setup, man. It was that perfect setup. So where's that? Is the 15-minute chart? Yes, it is. Like, you know what? Let me go ahead and erase this. Dude, like I saw this ETM candlestick right here,
Hmm.
right? Clean 15-minute candlestick. I like, bro, this is gonna be the one that's gonna give us all the money, right? We got some nice structure to the downside. We got pullback. We got the lower low just right
Hmm.
there. So there goes the structure downside. Got the little, lower low now. I'm like, all right, man. This one right here, once we get here, I mean, that we can throw all the Lambo lots that we need. All right. So, all right. How are we going to get there, right? How are we going to get there? So, I studied this price action inside, right? Inside of there. And on the 2-minute chart, I'm like, dude, look at these very nice ETM candlesticks that are right here. All right. So, we have a 2-minute rally based rally right here. We'll put that in blue. And then we have another 2-minute rally based rally right there. Okay. And we'll put that in blue. All right, man. You know what? This is gonna be the play, y'all. Anywhere around there is the entry. We'll take it up here to 30.60. And then from there, we'll look for a bonus play and just fill it all the way down, right? All the way down. Like, dude, this is the setup right here.
Hmm.
I guarantee it. I'm almost certain, right? I'm almost certain
I'm certain.
that it's gonna happen. Look at all these pips, y'all.
Yeah, look at
30,
that.
30, 70, 30, 70 to 22.90. Sheesh. And it actually
Yeah,
could go lower too, right? To complete the lower low.
you already counting the money.
Oh yeah, already thinking the
Yeah,
money and everything. And look at this, man. Okay, we get a nice
it's
reaction.
working.
We get a nice
It's working.
reaction there.
Working.
And then we come here. All right, perfectly that Instagram entry. All right, well, it didn't work. All right, but if that one doesn't work, this one's gonna work for sure. And then this one's pretty good, right?
There you
And
go.
then next thing you know, it goes all the way down, right? And we were able to change it up a little bit here and actually did take this trade to the downside. We did,
Hmm.
right? But again,
Right.
though, right, I was so stuck to that certainty that it was gonna go up there first. Then next thing you know, it did this, right? And then check this out, Marcus. You kept hitting play. Okay, we would have focused down here, I mean, obviously hindsight is 2020. We had a
Uh-huh.
one we did have a 1 hour rally based rally marked up,
Right.
and so forth. But look at this, guys. It does end up getting all the way up there. Once it
Right.
builds the structure here, let it go. Actually, let me just go ahead and rewind. Let me cut, and we'll see the setup right here.
Yeah, there it is.
Where's my drawings at? I need to erase my drawings. Oh, 15 minutes. Oh, that's why I was going so slow. So see, it broke this section, and it finally does come over here, man. Look at that.
And then it
It
comes right back down.
and it comes down. So it came in, it just missed the ETM candle, came down, gave a few pips, went back,
Back
did
to
a
it.
perfect touch,
Clean. Yep.
perfect touch. And again, so again, Marcus and
But
I, we've seen this a lot of times,
yeah.
but how it gets there, when it gets there, that's the uncertainty that we don't know, man.
And I mean, like you say, hindsight is 2020, right? That's, why I guess we can't I guess really deal we can't deal in certainties, right? Because where you were looking to buy, right? It appeared to me that everything was still bearish
Intraday, yep, it sure was.
in that moment. So, like you say, you allowed your bias to I guess you got ahead of yourself a little bit, right? Which can happen because obviously the market was going to go there. It was a good area. All those things were true and in place, but the market wasn't ready yet to make that turn.
Absolutely.
It was still bearish. I mean, and even looks like the boxes, indicated the same, from what you were
Yeah,
showing.
when they had the box earlier, yeah, it also
Yeah,
was indicating the same as well. And yeah,
but
but we'll go
good
go
stuff.
for it. Go for it. Yeah, we'll come back to this one, guys. Let's just take us to the let's see here, to the main session here when it comes to these as ETM. So this is basically our, the I know Kung Fu part, right? The ETM candles, supply and demand. Oh, did I lose Marcus there? Probably. No, still there.
No, I was just
But
getting out of the way.
you're good. You're good. Appreciate that, man. I'll hide my videos. All right, perfect. Yeah, so basically ETM, supply and demand, when we refer to ETM candles are these patterns right here, right? And they're all based on supply and demand, right? When there is too much supply in any market, you'll see prices go lower. When you see demand in any market, you'll see, prices going higher. Okay, so excess supply is control down, excess demand is control up or direction, right? So just like we do everything, right? Impulse correction, impulse correction. The impulse is the control, right? So we always want to focus on our equilibrium zones, right? Our equilibrium zone is where we enter, right? That's where we enter the market based on who's in control. The equilibrium zone is where buyers and sellers agree to take the market into the direction, right? That where the control is at. So on the downtrend, we try to enter the market on the lower high. On the uptrend, we try to enter the market at a higher low, right? We use the fibs, we use the ETM candles to try to find those entry levels, right? So, but if we want to kind of add some more context to this vague example, right? This is where those ETM candles come in. And we also have some rules or some trading parameters, right? So the very first thing we look for an ETM candle is the control and direction, or in other words, right, the impulse. After the impulse is complete, now we look for our entry and exits. We look for equilibrium. Okay, where is price going to go for us to enter, and then take it from there. The ETM candles also gives us the risk management, right? They tell us where to enter, where's our stop loss. And if you have those two parameters, your entry and your stop loss, you can manage your risk by counting those pips. And then from there, you can know, what lot size to use, how the money multiplies based on the pips and the lot size combined, right? So supply in control, right? Supply in control. Each of them have three different patterns. This is a concept. This is kind of more of the cookie cutter thing that we want to train our eyes. But a lot of times too, they're not always like this, right? These examples do not have wicks, and they don't have wicks on purpose because, right, we want to kind of train our eye to see the pattern just based on the pure open and close of each candlestick, right? But all three, the BEC, the drop base drop, and then the break of structure candle, they both have, a supply in control, right? And why is that? Well, because if we look at the BEC by itself, right, price opened up here and it closed down here. That's, simple, basic anatomy of a candlestick scenario. So what does this open and close mean? Well, it means the price, open at 3,000, right? And then it closed at 2,990. Okay. So it closed lower. The price level closed lower. So these three candlesticks are telling us a story, right? We have an engulfing candle that engulfs these two candlesticks to the left. Sellers are in control. Now the BC is not the engulfing candlestick. The BC is this little guy right here. Okay. Is the brother engulfed candlestick, right? A lot of times when we're talking about an engulfing candlestick, we just look at one candlestick to the left, right? Which is this one. But the BEC engulfs two candlesticks, which is it engulfs the previous one, which is normally usually a lot of times bullish, or whatever direction it is, and then the second one was a bear candle. So a bear candle engulfs another bear candle or brother candle, right? Therefore, that's why it's the BEC. So supply is in control. Okay. We got our control and direction check. Entry and exit. So the BEC, the price level of where that BEC is, that's our entry zone. Okay. That's our entry zone. And this could be a price level, let's call it at 2,998. All right, so price open here at 3,000, closed at 2,990. And then from there, right, we have the impulse, control and direction. Our entry zone, we wait for price to come back, enter. The stop loss is a $2 stop loss, which is 20 pips. Okay, so 20 pip stop loss. And then if we want to take it back to the lows, right, that is an 80 pip stop loss. So 80, 20. And then we manage our risk from there. And we're expecting the market to go lower. Alrighty. The drop base drops works very similar. The drop base drops, we basically have two strong drops down. We have a push down, a little consolidation area, and then another push down. This area here, the consolidation area, the base, that's usually kind of like where we draw our equilibrium zone, right? Right there. We let price come back to it. And then from there, we continue lowers. There was actually a good 1 hour rally-based rally that I want to go and back test with gold when we go back over there. Okay,
And there's actually
go for it.
also one from oh, it's a rally-based rally, but it's on the weekly. That's kind of set everything off from this
Okay,
most recent bull run
for
for gold.
for gold, awesome.
Mhm.
We'll check it out, man. Let me write those notes down here before I forget. We'll come back to them. But yeah, I have a 1 hour rally-based rally I want to talk about, and then we'll go to that weekly one as well. Now the break and structure candle, very similar to the BEC. The main difference with this one is that it engulfs two candlesticks, but two bullish candlesticks. So technically, if this were a bullish structure, the market at some point was trending upwards. We got the first low, we got the second low, so low one, low two, or higher low one, higher low two. It goes both of them, right? And how do you find for entry on this one? A lot of times for this one, we do measure it with the fib, right? We start the fib from 1 to 0. And then from here, we look for those retracements at those 50% levels, at the 38%, the 61, 8, 78%. Or if you really want to fine tune, you mark up your high and low or your low and high from this candle and go to another time frame and then basically find these patterns again, find the drop base drop or the BEC to give us that finesse entry. And then the stop loss on this one will be at the 1 or whatever other ETM candlesticks that we have. But going back to this quote here is before we go to the demand and control examples. Oh, nice. I know I have to check that out. When you know the simple movements so well that you can perform them without thinking, you are free to pay attention to more advanced details. So, but yeah, man, we're you gonna add anything to the Marcus?
Yeah, what I'll say is just to reiterate that the examples we go over here are like, hey, these are, ideal, looking ETM candles, right? These are like, there's no wicks and all this other things that sometimes you may have questions about, or that show up, in the charts, right? So so don't think that every ETM candle has to look exactly like this. I'm not saying anybody does, but just wanted to put that out there, because the market is going to, have different variations, right? Sometimes, BEC is going to be like small, but it's still a BEC. Sometimes the drop base drop or the rally base rally, one leg of that could be like, really long. It all depends. So there could be different variations, but um, this is helps get us get the foundational concept and imagery together.
Absolutely. And
Yep.
yeah, so I mean, again, though, like if you know nothing about trading, you come in brand new, right? Once you know how to enter trades through your trading platform, and you learn these ETM candles, right? You that's all the pattern that you would need, right? We can't control the market; we can only control our risk. And if you focus on these ETM candles, you have it's a simpler pattern, in my opinion, than trying to learn like a harmonic, trying to see a head and shoulders, because obviously with the head and shoulders you need a lot of price pattern to form, or even flags. Flags take time to develop. These are just three candlesticks, right? Three candlesticks tell us the story, and tell us who's in control, where to enter and where to exit, and if you may need to add the fib in there or not, right, to kind of get a better entry. But if you don't, the ETM candles will take care of you. Alrighty. So the demand and control is identical, just inversed, right? We have the engulfing candlestick right here. So technically, this is the low and the high. Simultaneously, is also the open and the close, right? So it's an impulse. What happens after the impulse, right? We wait for a correction, and then we turn price around to take us back up. So if you see it, the engulfing candlestick is the impulse, and the ETM candle is the area for price to enter to take us back up. Rally based rally, right? As we always said, right? The rally based rally is technically an impulse, correction, impulse. Okay. The base is the easiest way to identify where to enter. But sometimes, right, if this is the low and this is the high, this is technically the higher low, and this is technically the higher high, right? A lot of times we're measuring the fib from the higher low to the higher high, and price won't touch the base simply because price comes to 23%, 61% areas of the fib for price to get in there and bounce and then turn around and finish the next move, right? And then last but not least, right, the break of structure candle. Same thing with this one, right? This one price was actually trending downwards. It breaks two highs. Therefore, to us, is officially now a break of structure. And we wait for it, we measure it low to high with the fib level. That's about 50%. That's about 78%. That's about 23 to 38%. And we look for levels in here for it to turn. Okay, it to turn. So those are the examples there. We'll transition over to the charts. Namaya, which is also has been a student for us for years now, is also now his own master trader, getting funded everywhere in all of London. um, he did share some nice charts there that kind of just want to just review right quick, and I will let unmute yourself, man. And I'll give you access here, and then I'll put your charts up here. But let me share this chart first here. Got your charts over here. And
Hello, can you hear me?
yes, sir. How's it going, Amaya?
Fantastic. Thank you guys for putting this session on. It's been a while since I've been on as well, so it's amazing to come back and do this again.
Oh, absolutely, man. If you don't mind, real quick, man. I know you've been chatting with us in the chat that we have, but just give yourself a quick intro. Just say hello to the people, and obviously your experience with the ETM candles, and then we'll go through your charts.
Yeah. So, well, my name is Nem. I'm based in London. I'm 31 years old, and I got into trading about 4 years ago, when the guys was with the other company. And if anything that made trading a lot easier is when G Money and Marcus really explained about ETM candles, and it's still my bread and butter today. I study the cloud heavily, master the cloud, but ETM candles for me, I can't unsee it. And I always remember G Money saying that to me, and even Marcus as well, saying that once you see it, you can't unsee it. And 4 years on, it's still my bread and butter entries. But and this is why I wanted to have conversations because I don't know if anyone finds that when you're trading ETMs at times, my issue is at times is I feel like I'm getting in too early. So as you can see here, this what you see here, by the way, passed my funded account as well. So
Yes.
That's
this this trade here is I've passed it like twice, like fully funded now. But this candle here is what got me funded again.
Talking about
So
right
this,
here, right? And Amaya, just so we can make sure that we're watching the
yes,
same
yes,
thing.
that's correct. Yeah.
Perfect.
So that ETM candle. But what I wanted to discuss with you guys is when do you increase your lot sizes of a confirmation? And two is I also find that do you see that candle in the middle where it's touched?
This one
Yeah,
right here.
I always find, and I don't know if it's because I trade London session that is probably the case. Yeah, and then I'll have to wait. Is I always find that I'm getting into entries early. So, like, let's say that candle in the middle, it will come back and then does its move. And it frustrates me because I keep breaking even too early because the prices come back, or it's it's gone in it. So I don't know if you understand the question, but how can I get better at making sure I'm really going with momentum with ETM candles?
all
Yeah.
right.
Go
G,
for
let me,
Marcus.
I was gonna say that's a great question and a really great observation. There's something that me and G we came across, what is it now, G? This may have been like 3 years ago or so when we were talking about the second touch.
Yeah.
Mhm.
Yeah. The Now it doesn't always do it though, right? You may get
Yeah.
that first touch, the second touch. And so what we've found is that okay, you can a couple of ways to yeah, I guess maybe deal with that is one, um, we don't go to break even, right?
Mhm.
Or if you go to break even, right? When it comes back that second time, we just enter again,
Okay.
right? You can enter again. And maybe at that second entry, you could, if it's going to take off, you can reduce your risk some. But ideally, when you enter on that, which is fine, we are a little bit slower to go to break even, right? And give the chance for the trade to play out, right? get
Hmm.
that second touch, because if it's get that second touch and it begins to take off, you can see from these candles that it got that first touch and then the second touch had a really strong reaction, right? Which is a good indication that the momentum is going in your favor, and there are buyers at that level, right? So not going to break even, uh, right away,
Okay.
or not, excuse me, not right away, but not going to break even soon, but giving the chance for the trade to play out some is kind of the approach I like, because if you take the trade mentally, you've already committed to the other side of that being the case where the trade doesn't work out and you take the loss, right? What we do struggle with sometimes, okay, I'm in a little bit of profit, right? And I want to go to break even because, make the trade quote unquote risk free.
Hmm.
But as you're saying, you were experiencing it comes back, you're, break even, which, you don't win, you don't lose, but you get to trade another day. Again, I'd say hold on going, break even, right? Mentally commit to the trade going against you, being okay with, okay, I had a little profit, it came back, and it went against me, took the loss. That's part of the market that gives you the chance to commit to the trade once you've done all your other processes, and you let the trade play out, and either it's gonna hit
So
your
my
take profit or it's gonna hit
so
your stop
can I
loss. Go ahead.
can I ask another question then?
Yeah.
So another question I want to ask is when it comes to, let's say, break even. So, and I just want to see if you can guide me on this. Is so I normally have 20 pip stop loss, or sometimes like this one, it can be a bit tighter based on the ETM candle. Now, when you want to break even, how many pips should you suggest? So, for me personally, I always try to go 20 pips break even, or partial TP, as let's say TP want to cover any mitigating loss that I have or
I
want.
gotcha. I gotcha.
Yeah.
Um,
So how, what, like, what do you guys do? Yeah, because now I'm at an advanced stage. So sorry if these are questions that are more advanced. I'm trying to fine tune even more to maximize and limit the losses.
right.
Let me just chime in right there too,
Go ahead.
Marcus. So the two things, right, that I noticed, for starters, right, it's like this one, the setup that you shared right here.
Hmm.
Obviously, I think this was kind of, I'll check back here in a second, but this could have been like a news liquidity grab. I'm not sure. Like,
No, there was no news,
no
no news,
news. So
no
prices
news.
came in. So
Yeah.
see, this is kind of like the Achilles heel of just trading gold all the time, right? The gold is so aggressive that it just needs one touch and goes.
Hmm.
One time that what I noticed about the currencies is, there's not too much volume in the currencies like there is gold. So sometimes we said it before, right? That the price needs to come back to those orders to fill those orders multiple times. And then this example right here, obviously it just needed two touches to take off. And we just look to the left a little bit, like even this little rally base rally here, right?
Hmm.
This one just gave us one touch and go, right? So it's just it's a way for the market, like the market knows what we're looking at, or I guess they know, that we're in a good position and they know where those orders and stop losses are at, and just sometimes they come for us. The In order for you to win this trade fully, right? You literally just set it and forget it, and but even at your first touchdown, Amayo, it should have won based on your take profit. Not sure you try to enter there or not,
No,
right?
I
But
didn't. I didn't, but this always happens to me like a number of times in it, and I get annoyed with myself going like, "Oh, I'm wrong." Even though the trade's gone up a couple pips, I'm like, "Oh," and it's come back again, and then it's gone and actually done the full TP that I really wanted.
got it.
Because for this one, I only needed 20 pips to pass my funded account in it. Um, so uh, it's just a normal thing that I find, and I feel like it sounds really silly, but fear kind of kicks in of, oh, is this actually gonna hold again? Yeah,
Got it.
and that's where I'm sometimes losing because Another question I have as well is, let's say price this last down candle closes fully bearish and no wick rejection. Would you guys still enter, or would you basically not put the trade on?
On this 5 minute chart right here.
Yeah, yeah, yeah. So say for example, you see this last minute 5 minute candle,
Mm-hmm.
that one. Say for example, it pushed down more to the end of the green box. Would you still enter, or would you be like, no, this trade ain't holding?
Let
This
me.
ETM candle.
No, I got you. I got you. So see, let me go to this chart. This is a 1 hour chart of Enda. I do appreciate the feedback there. I think everybody in attendance is more alert and just kind of getting more questions here and there. With this, let me go. Which Euro USD do you normally use? Oanda or
Yeah, I
FX.com?
wonder. I
All right,
wonder.
well,
Sorry if I'm taking over, but I just
no,
it's
no,
been
no. This is all part of ETM, so definitely worth. This is it right here, right? This one right
yeah.
here.
Yeah.
All right, perfect. All right,
So
so we'll mark up this area here, and
so
we'll
imagine I wanted to play that other ETCM on your left hand side. Yeah, that one, but it didn't hold. But actually, it still went in the right direction. Like I catch myself them plays at times.
got it. Let's see here. Let me just put this one is a 1 hour rally based rally. And very similar, right, to Mark, we were saying that how these sometimes price just comes back to the area multiple times, sometimes just one time. But one
Mhm.
of the things that I'm back testing the Maya, uh okay, Cindy, thank you. One of the things that I'm noticing is like, okay, obviously when we get there, we know that's a bullish demand zone, right? Here in so this the final touch was the one that took it home. This was a good one that gave you some good pips as well, right?
Yeah.
But technically it didn't make the higher high. So it was this is the good one. So I like to always combine everything with structure. And the
Yeah.
touch that was the one to take was this one, because this was the one that made the new higher high. So
Hmm.
with that being said, what I've been noticing with gold is that when we come to an ETM candlestick here or there, right, is how does it look like on the 5 minute chart, or how does it look like in how do the candlesticks look in a 5 minute chart or a 15-minute chart? Here, there's
Hmm.
there's really nothing there. Okay, just straight up buys. But on the 15 minute, okay, you start seeing like these morning star, evening star patterns forming. And I granted I don't like how high it's closed, right? But again, that's kind of how gold does it. Um, if I was on Euro USD, the way just more monitoring more closely, that 1 hour rally based rally was definitely solid, right? Was definitely solid to take. And then the other thing that I like for confirmation is that we actually formed a harmonic pattern or an M pattern right in it. So, you know, to get this one, in my opinion, it would just be more of a set it and forget it and just let the trade play out, even if you got the first touch. Because this one was a little bit tricky. If I'm not sure you can confirm that, Marcus, because the price action was came back too many times.
We see what you say harmonic pattern, because I know you used to show it all the time, but I never, even now, like if you didn't draw it, I didn't even know that was a harmonic pattern.
No,
Like
yeah, no, yeah. This one was tricky. I mean, not tricky in the sense it was more like it tested our patience type of thing. It's like the setup was there. It was just the setup was so clean that the market was just testing our patience.
Right. Let me add into that too. I mean, so these
Go for
are
it.
these are, great discussion and questions, but it takes us back a little bit to what we were talking about at the start of the session, and that is, the element of certainty, right? We're trying to we're asking great questions, but we want to, and to some degree, find a bit more certainty in the process. And when do we when do you go to break even, or when do you do this? And here's the thing about it is that there's no level of certainty to really reach, right? What we have to learn to deal with is, okay, this is what I'm going to do, right? If I enter, I'm going to go to break even at this point, right? Because even if you even if that's the thing that you choose to do, there's going to be times when you go to break even and the trade continues to go. There are going to be times when you go to break even and it comes back, you get stopped out at break even or a small profit or whatever the case may be, right? I understand you want to maximize it. So in order to, well, I don't really, I'm not gonna say I don't like the term maximize, right? Because maximize puts us in a state of where we're trying to, subconsciously control the outcome, which, leads into dangerous territory, from a psychological standpoint, right? Because we can't control the outcome, right? If we optimize, right? If we'll try to get, the best entry and what works for you in terms of a strategy, what helps you, not be glued to the charts if you don't need to be. Like G said, where we can kind of enter, we set our parameters and, we let the trade play out. Um, if it helps you to be consistent, stay focused by moving your stop loss, by moving your stop loss to break even at a certain amount of profit, or maybe even taking a small partial, then moving it to break even, then that's what you do. Otherwise, you got to let the trade play out, because anything in between that is just going to be another uh, level to some degree of speculation. And we there's so many unknown variables in the market that there's no way to box everything in, if that makes sense, right? So here on this particular one with Euro USD, if you go back to the 30-minute, um, right? Is this 30-minute?
Oh, sorry, the Maya. Yeah, hold on. Hold on, Marcus. There you
I
go.
just, sorry, thank you. I just wanted to ask one more question then. So, say for example, obviously it's reject because it's gone in my direction, which is great. So let's say for example, would you guys on the 5 minute, if that 5 minute closes bullish like it has, would you then put another buy order, thinking that okay, we've got the confirmation that it's rejecting? Where would you put another buy order? Yeah, is it the first 5 minute close candle? So let's say you put a small lot size in at the rally base rally and you
Right here,
go,
right? Yeah. So like our pebble entry, right? Our tried.
yeah,
Yeah, gotcha.
yeah,
That's a good question.
yeah. Because I know you've spoken about this before. I put a pebble entry and then like let's say your Lambo lot size. What is your confirmation of okay, bang, I'm gonna put another lot size in now.
Got it. Okay, it's a good observation there. We'll jump back to you, Marcus, in a second. So it's just, it's more about like, okay, where is price going to go, and if there's enough pips in there for us to take it up, right? So the setup for the ETM in this scenario, like the actual setup, is you enter there, stop loss at the wick, right? And then from there, you let it run where however it needs to run. If it's really gonna go up, it should at least go to these highs, right? Like right now, man, like gold for particular, I'm not sure how the other pairs are moving too much, but gold is actually like, because it's so bullish, it's surpassing its normal pip count that it normally has. So like, let's just say before Trump came in, the 15-30 pip stop loss was the way to go when it comes to gold. Now it's just because, and it used to give you 90 pips and you're done, but now it's giving us like 400, 600 pips on an intraday basis. So if the price is naturally giving us more pips on the side that we want to go, we also kind of have to give a little bit of room more to the stop loss. But regardless, right here, 1 hour rally base rally, you got there. I can see us getting to right here, okay, at least at that little line right there. And we go to the 5 minute chart, okay. You put in your pebble entry at the touch, and then you see this, maybe you give yourself three, right? Three, wasn't this price pattern called, Marcus, the three little soldiers pattern, the bullish pattern that it is? Maybe you give yourself three, candlesticks to confirm that it's bullish. Maybe you give yourself two. But regardless, though, right? Even at the first one, you know, if you would have entered at the first one, if you would have entered at the first one, you wouldn't have got it stopped out because the wick, right? The wick never came back and took out the first bullish candle. If you waited for the second candlestick to close, notice here that the third candle gave an entry about 38% to this one, and your stop loss could have been here. And then from there, the as long as the target has enough pips for us to continue upwards, 20 something pips, and then that can multiply your money or pass your funded. That's all you need, man.
Okay, no, thank you, because it's been bugging me for time. Like, when do you guys, like I said, because I've always entered, and sometimes it's way too early and then I lose that trade. Or sometimes I'm like, all right, how do I'm gonna say it again, sorry, Marcus, is maximize that entry point? Because there's times where I can't lie to you guys where I have left crazy amount of money on the table and
Is
it's
it
bug
because you put your stop loss and break even?
yeah, too
Oof,
quickly.
yeah.
Yeah. And it's bugged me like I'm talking thousands. Yeah.
No.
Yeah.
And what would you say to that, Marcus?
If it's happening to you a lot, then you gotta let the trade play out, right? You
Yeah.
gotta be because the market's gonna move, you know, it's gonna move in waves. So what you're gonna get if you let the trade play out is you're gonna be in profit.
Mhm.
Uh, the market to come back, you'll be in less profit. If it's going in your favor, the market to go back up, you'll be in a little bit more profit, so on and so forth. In this particular example, the first entry, right, it moved up. Eventually, you had a high here and it broke that high, right? Normally,
Yeah.
that's a nice trade, right? This is the first entry. You got close to the highs. How many pips is that?
I mean, this one is it's not gold, but
It's not
it's
gold, right? It's
30
30
pips.
pips. Which is not bad, but now we're basing it on the 5 minute. If you go back to the hour, because that's where the base rally was.
True.
Um, let me, let's
Yeah, you're trying to go to at least this high, at least that one. We're still holding. We're still
hmm,
holding this trade.
to go to this high. You get that high, and then you have a supply area that's back up here that he has marked up,
Mhm.
right? So a couple of modes of thought is okay. I have a 1 hour setup, right?
Yeah.
You got a 1 hour setup, but you got a 5 minute target, right? So that's going to be a shorter target. It's going to take more time for that. It's going to take less time for that trade to play out. You're not going to get the same amount of pips. But now, if this is a 1 hour play, I'm going to play it like a 1 hour. I'm going to enter here, stop loss here. It gets to these highs. I'm going to take, you know, partial, and then move my stop, you know, maybe to break even at that point. But this is my target,
Mhm.
right? So I have a higher target because of this is the play that I see, right? I'm just kind of speaking from that standpoint. Um, that way because again, we don't know which trade is going to be the one that gives us that run where you don't leave thousands on the table, right? We don't know.
Yeah,
There's no way to
I know.
know that, right? The only thing to do is, okay, if I'm doing these same things every time, right, then I'm eventually going to catch one where I don't leave it on the table and it really runs, right? There are some indications there that, gives us maybe a better chance, right? If we're looking for higher targets, is the structure overall on higher time frames, does it align with that, right? If we look on the 4 hour, is it, also a little bit more bullish to give us, a little bit more idea of probability that it can go to the target we have on the 1 hour. So just some things like that we take into consideration, right? We don't let those things bog us down, but we want to be aware and like, okay, we have a good probability based on these things here, the 4 hour, 1 hour. I got my entry, I got my risk set. If it gets to, and you have a plan, right? If it gets to this particular high, okay, I'm going to take a partial and I'll break even, and then I'll let it go from there.
100%.
And then we just gotta let it go. Yeah, you gotta let it go, bro, because other than that, we're gripping the steering wheel too tight.
You're almost there, dude. And you had a question about lot sizing. I think Cindy
Yeah.
was reminding me um about that. Make sure to ask you. What was your question about lot sizing?
Well, you kind of answered because look, lot size is always going to be based on the individual, right? But I was
Right.
more like um, when it comes down to, for example, like I said, you're in an ATM area. When do you, like I said about maximize, when do you can increase your lot sizes once that's going in the right direction, if that makes sense? So you kind of answered it with the five, how you broke down the 5 minutes
Mm-hmm.
of like, all right, well, that 5 minute confirmation, then go again. Because sometimes I don't want to wait for the whole 15-minute candle, let's just say, to have a re-entry and then it
Right.
comes down again, innit? Yeah. And then you're now, let's say the trade doesn't hold, you're now losing more than you could have in it. So I was just more wanted to really, like I said, is understand is when a confirmation of the trade is playing out is when to add that one more in. That's not like your pebble, but an actual full risk that you was gonna put like 1 to 3, if that makes sense.
No, yeah, and just on that alone, right? Like, yeah, I do have those pebble entries just to kind of test the waters out,
Mhm.
and I think myself, everybody that that's trading a long time, it's very hard to hold a full lot size, because the way that money can multiply, right? It's like, man, to hold that entire trade, to go in profit and then coming back to break even, that's a roller coaster of emotions. So, and I think a lot of people are just, if they see that momentum and you see the momentum giving you 10, 20 pips of a burst, right? You enter that quote unquote Lambo lot, you close it immediately, and then you let your runner be that smaller lot size.
Yeah.
Because again, right, the whole purpose is just multiplying our money, either passing the funded account without bending the rules way too more, breaking the rules, excuse me, way too much, and just multiply your income. Because
So
the market will come
let
back
me
and
let me
test.
add this. Let me add this in there real quick. So in the process that G was mentioning is, okay, your, I guess, quote unquote, pebble entry was at the ETM level. You waited for more confirmation. Now you do have to consider if the trade is going to play out, you're moving further away from an optimal entry, right?
Mhm.
Um, you have a more of a risk. Uh, what's the right word? Not barrier. You have more of a risk profile now
Appetite.
because of your well, not an appetite. You have a higher entry that's higher than the optimal entry. This was the
Oh,
entry,
sorry.
right? So now your entry is higher. So it's now you're in what G was saying. It becomes less of a normal intraday trade and
Mhm.
becomes like, okay, I'm going to scalp.
Yes.
Yeah.
I'm going
Yeah.
to scalp 20 pips in this, in this direction, or 10 pips in this direction, right?
That's actually the
But
word right there, Mark. Yeah, that is the
yeah,
word. It's like
mhm.
you got the pebble entry at the Instagram level. You know where it's going because your take profit is there. All right, I am that is the right word. Scalp. that 10, 15, 20 pips of burst, get out, and you still got your optimal entry,
Oh, okay.
which
No.
you are more comfortable letting it run, and you are also more comfortable, you know, not moving any parameters. Is that what you're
Now,
trying to say, Marcus?
right now here's another thing that you can do because I'm a proponent of just trying to see both sides of it. So say you got that entry, and you
Hmm.
can leave it on here.
Mm-hmm.
So we let it run, or actually take it to the 5,
Yeah.
right? Because you're not gonna. All right, so where is this? This is the 5 minute. Okay, you got that entry. That's your pebble, right? Where
Hmm.
am I going to say, hey, if I'm going to scalp, what is it that I'm really looking for, right?
Capalambo.
Right, and so I say, let me look right here, and then you can go to the 2 minute.
Let's see how it
Let
really
me see,
plays.
leave those
I think it gives
levels
us.
in place,
Oh, you know what? The 2 minute was actually better than Maya. Look at this.
right?
It gave us a little rally based rally there. It also gave us one right here. But go for it, Marcus. I already know what I would do here.
Yeah, I know you would too. So you got your entry there, right?
That's the pebble
Particularly
entry.
like what I'm looking at, that's the pebble, right? I'm like, okay, if we start to break this structure up here and I'm scalping, then I'm scalping, right, first, for this target up here, this particular high, right?
Hmm.
I don't know how many pips that is, right? And then, or if you want to wait, right, then you scalp here to here, right?
Okay. Yeah.
Yeah.
So there's two levels where you could maybe catch some scalps, right? But again, you got to consider the other side of that. If you're going to put a higher lot up there, and you're scalping. If it goes against you, you got to either pull the trigger quick to get out, or it's gonna it's gonna run back to your previous entry, or you give the possibility to run back to your previous entry. So that's one way you could do it. Or just for argument's sake, let's say you're working with a standard lot, right? That you're going to scalp, right? What are you? That's why it's the ideal thing or the optimal thing here is okay. This is the best entry given all other factors, right? Instruction, everything. What is it? What is the most I'm willing to lose if it goes against me from here, right? Let's say you're going to scalp, you know, that's half a standard once you get up there, or standard when you get there, right? So maybe I'm not gonna, because if you scalp a standard and it goes against you, it's gonna add up pretty quick, and you're gonna
Yeah.
have to hop out, right?
Yeah.
But it's okay. I'm not gonna scalp a standard. I'm gonna do a 0.25 or from here,
Hmm.
right? From the optimal level, and do a 0.25. If I get up here, I'll take, you know, half of it off, and then I'll let it run.
Hmm. Hmm. Yeah.
Right. Here's the thing. You may not make as much as letting it all run, definitely. Maybe if that standard plays out from here and to there, it'll be a certain amount. But then
Yeah.
again, there's no certainty.
Yeah.
We can't find it. The only thing that's certain is like, what am I willing to lose? What am I going to be psychologically okay with if it all goes kaput?
Can I ask you one question then? So
Yeah.
'cause this is something that I'm still trying to get better with structure. So in terms of your target points, you're always targeting, even on the lower time frames, the next structure point that because obviously you were selling, they came back down and then target that next structure point,
Hmm.
like confirming, okay, here's that bullish play is taking out all the high lows.
This is one thing that I can probably help you out here, Nomai, is this is for example, we have the setup here. If I go to the 20-minute chart, okay, it will activate the yeah, the sessions indicator.
Yeah.
Okay, right here. And so a lot of times what I'm doing is just understanding, how many pips does the chart have left, right?
Mhm.
So for example, here, okay, this is 8 a.m. This is New York Open, right? This is New York Open. This pullback happened. It took out the low of the London session of when it opened.
Mhm.
What I have marked up. So the New York range, okay, is right here. That's the New York range. It went down, okay, 27 pips.
Mhm.
On average, I'll use a 21-day average on this indicator. It goes up to 90 pips now. You see, 90 pips. So if this is the low,
Mhm.
it can go up to 90 pips. I'll give us an accurate count here. Now, how is it going to get there? Right? It could do this and then do this and then do this, but then it can give you the 90. So one thing that I like to do, yeah, the structure points are important, but one thing that I am relying a lot is how many pips is it going to give each session? Because these numbers, they're mathematically calculated automatically.
Yeah.
So from the low, where is a 90 pip move? Well, the 90 pip move is all the way over here. Look at this. Ain't all right there. That's the whole 90 pip move from the low. Okay. So now we can go, okay, you know what? They could potentially reach at least this structure. If it really is bullish, it'll go and reach this structure. But this will be a good TP, right? This will be a good TP. And you're basing it not just on, because again, these little smaller structures on the smaller time frame, they will fool us, right? Because they may help, they may um ask us to take probably a little bit sooner because there are little structure points. But based on the New York session, this thing has the juice to give 90 pips. And these highs right here are about 50% of that 90 pip push. Like, okay, you know what? I at least want to take it there. And okay, we're done. Or take partials and we're done. But see, you get a little bit more. And then next thing you know, it just kind of gives about half about of the 90 pips. So not sure if you're using that sessions indicator in particular, but that has
No.
really that really has helped eliminate the structure noise, right?
Yeah.
Because it's just counting from low to high. Usually, how many pips it can go during a New York session or London session. So
Sorry, and you said that was you used 21.
yeah, so the sessions indicator that I'm using is the high draw
Because I
this.
do use the same indicator, I just don't have it on.
It's the market sessions by Boy Toiki. Make sure your timers are set right. History is just kind of giving you the last there, but it's at the bottom right here. This information box right here.
Oh, okay, yeah, yeah, yeah.
That's the last 21 days or the last 50 days or whatever it is you want to kind of get the average of.
Yeah.
It'll give you the average of those pips right there.
Thank you.
But no, for sure, man. Great question. I appreciate them. Yeah, we do have to get ready to wrap up there.
Yeah, no, thank you guys. I appreciate this.
No,
You've a lot, and I hope the questions helped anyone else.
no problem. No, yeah, I think I'm pretty sure they did. Um, yeah, let's Marcus, I can go ahead and wrap it up, Marcus. If you have to take off, and I just
Oh,
wrap up the
let's close it out.
okay. No, I was gonna do gold very quick, but if you
Go
have
ahead.
to, if you don't, okay, perfect. Let's do that. 21 days, it's just kind of an average, Danimal, just an average. Obviously the more average you have, the better, but just 21 days has been pretty good last 3 weeks. There's also 20 something days in the trading month. So just little things like that. But I actually already have gold marked up for myself, and I'll share what I have here for you guys with you guys. Let's see, you know what? I think I deleted it by mistake. But yeah, I have it. I have a pretty good markup on it to see if it can help out. And I'll go ahead and just do it on the Saxo chart for just to have this one good to go. And we'll quickly start here. Previous weekly candlestick. Oh, this is the rally based rally you're talking about, right, Marcus? I'm assuming. on the
Well,
weekly
actually,
skip.
I went back and looked at it. Mine was from a while ago, but it's
Hmm.
actually this whole bull run that's been going on for the last 2.5 years
Yeah.
is where it really kicked off from.
Oh, the one
But
that I've been talking about the whole time? The one from the I
yeah, it's on there. I mean,
I know
that was
I
the
know
one.
I know. I was yeah, I remember. I'll never forget
That's
it.
right there. Yeah.
Right there. I was in the Bahamas right here. This is the problem with sometimes scalping guys. They were trying to scalp right here, and
Well,
they were winning a lot of money, but we missed the buy.
18,000 pips later.
I know. All right, so here it is, guys. So this is a previous weekly candlestick. Okay, it is a bearish candlestick, but it's more of a doji. We have a major wick to the top and somewhat of a wick at the bottom, but that's the previous weekly low, right? So based on this, right, based on this alone, you know, we can go to the 4 hour chart. Let me quickly just hide the indicators right quick. And we are opening the week at a 78% level. So we're basically opening the week at an institutional level where the buyers can just quickly, step in. Right. So there goes the previous weekly fib. Okay. So I'm always, looking at impulses so I can, an impulse low to high, high to low, so I can see, where are we at with the fib, after just it's a lot of back testing, always fine tuning. I am liking the weekly fib never changes. I think that's one question that's in the ad. The weekly fib never changes. However, I do because I trade intraday, the 1 hour structure or the 1 hour impulse are important to me. And also anything at the 15 level or lower. So based on this, okay, let's tell ourselves a story. The new week is going to open at 78%, right? With this is institutional level. Before it makes a higher high, where could price go to? Well, it can go at least to the 23%, right? Because we know how that 23% can behave like support and resistance or a key level. All right, perfect. So now we got some, things to consider. Is this the impulse down that we should be measuring? Or is this the impulse up that should be measuring? Well, because the market is fractal and everything, we can do whatever the heck we want, to be honest, right? We can do what the heck we want with the fib. So if I fib from high to low with a 1 hour fib, okay, what can confirm the bullish push? Okay, based on the 1 hour fib, what can confirm the bullish push or the bullish volume? If we can stay above the 23% from high to low, it can confirm some bullish volume, right? So we got that there. So now, as our old mentor used to say, play devil's advocate. Remember that, Marcus? Mr. Cobain?
Hmm.
That's technically our fib mentor. So, but now we can play the devil's advocate. Okay, let's say this is the impulse from high to low, like this. So to give us even more confirmation that this thing will be more bullish, if we can go towards this 1 hour drop base drop, and if the 23% does not push price down, and if we just stay above it, well, man, we're free and clear to potentially take us to that 23%. All right. So the impulse down, I'm gonna use a 1 hour fib. The impulse up, I'm gonna use that as a 15-minute fib just so they won't overlap too much. And let me do that right quick so we can give you guys a markup, but then we use the midpoint boxes to help us out. So there goes the 1 hour. We got the weekly fib on the right, okay, which is the gray one. This 1 hour fib here, okay. If we get above that 23%, that gives us some confirmation that we are going to be bullish. We also have this M pattern harmonic that can give us the volume that we need to take us back up. And then last but not least, right, on my 15-minute chart, the big 4 hour, the big weekly fib goes away, but I'm gonna measure it from this low to this high on a 15-minute scale. Oh, right there. Okay. So I'm speculating, guys, that this 23% level is going to be our decision zone right here, which is the price lines of 33.40, 33.50. Okay. We're either going to get to it and then complete a lower low. Okay. And go down to the extensions, to be honest. Okay. Or, if you guys can see it here, right? We got this huge impulse, this retracement to about 38% of the 1 hour fib. We can go there and bring us back down, or we could potentially just, use go back up to the fib level of the 23%, which at the same time, I believe it's the 78%, right, of the impulse downwards. All right. So my speculation is like this. Either we get above it and then we go back up to the 78% or 23% of the weekly. And to make it even easier, check this out, Marcus. Is this 1 hour rally base rally? Right there in that same zone.
Yes.
That's all it is. So that either is going to behave like supply or it's going to behave like a flip zone. And then we'll use that intraday momentum throughout the week. That one too, man. Good observation there. That's going to be used. We'll use the momentum throughout the week to help us decide. And at least, right? And at least we have a potential. So it's either going to do the above or it's going to do something like this and go down below. And then from there, we know how many pips are at stake. And we can capitalize our movement there. And there it is. Let's close it out, man. Summarize this and let's close it out. What do you think?
Yeah. I mean, obviously we know everything that gold has been doing, high level view. It's been very bullish. Um, so I always just say, you got to try to be patient, right? We want to get the best entry, but we just have to be patient and let the market, reveal to us. I see Cindy was asking about lot size. I think we kind of touched on that. What Namai was asking was when you get that in his example on Euro USD, the first entry was a smaller entry. Um, when we get some confirmation of price moving in our direction, when do you kind of put a larger entry in? And that's what we were addressing, is that when you get that pebble entry at the ETM candle, if you're going to go that route, then a larger entry or any additional entries are likely going to be, of a scalping nature, which will be a larger lot size, with a very small, profit target. And you're hoping to hit that very quickly. Or, from the beginning where the ETM candle is, you just manage to trade with a smaller entry, right? Because what we find ourselves in is trying to, force certainties out of the market, right? And it's all risk. It's all risk. That's what we're managing, right? We're trying to force certainties out of the market, put larger lot size in so we can see bigger returns. But if you're going to risk more, I mean, if you're going to put a larger lot size, the nature of the market means that you're going to risk more potential loss, right? And if you're risking more potential loss at a less optimal position in terms of entry, you know, that's what it is. You got to take that in consideration. What I found in this, ladies and gentlemen, there is no shortcut. There is no shortcut, right? This is a craft, right? And the people who will show like flashes, the money, right? I mean, there's no way to validate that. Maybe they did. Maybe if they made a lot of money in a short amount of time, what is the probability that they did that, you know,
What's that
without
statement, Marcus? Like, past results don't guarantee
future
future.
profits?
Yeah, yeah. I
Yeah,
mean, just you can you can you can make a million, and
right.
you can lose that million the very next day or
You
half of
know, like what were they risking to make, large profits, right? All that's taken into consideration. So you kind of got to block out the noise to a certain degree and understand just the conceptual logic of risk, right? In trading, which means that the more that I wage, if you want to say that, both sides are there. I can I can win more potentially. I could lose more potentially, right? There's no way around it. Nobody can say, yeah, you can risk more. You put a tighter stop loss, all that. I mean, look, you're either gonna win or you're gonna lose, or you manage it somewhere in between, partial profit, break even, whatever the case may be. But if you decide to put larger lot sizes, you have to calculate wherever I enter, what are you willing to lose if it doesn't go your way, right? And that's at the end of the day, that's about as certain as you can get, right? But we'll be back. There'll be another ETM session come around. Like I said, we're definitely gonna try to do this monthly, maybe even twice a month. We'll come to that. But these sessions are good. I think it's good to have these, discussions, reiterate certain things and continue to build a mindset. But we appreciate you all for your time today and enjoy the week. Happy trading, and we'll see you on the next go round. Peace.
So, Marcus, see you guys.